Good morning, Checkmate crew. It's 3 a.m. On this, today's Wednesday now, February 22nd, 2023. Yours truly, Mickey Blindside here. Sorry I couldn't make it earlier yesterday. I had some things come up, and I already told you all on the Discord that I was going to miss today. So I wanted to make it up and do a session before my day got busy again. So I'm doing this at 3 a.m. I just wanted to do a recap and also just take a look at everything that's going on in the markets. I know that some of you guys are questioning like what's going on. Is there a sell-off? Are we back in bear market again? So let's take a look at the internal data. Let's see what's going on. So first off, junk bonds ADL. Let's start with our market internals today. All right. If you look at our market internals, we've been saying this since February. I think it's February 8th. We've been seeing a lot more declines than advances. We saw 4 days in a row of declines, right? We saw 4 days in a row of declines back on February the 8th. And now I think we're on day 12. Yeah, we're on day 12 now of that. So let's take a look here. 1, 2, 3, 4 right there. Okay, February 8th. That's when I warned you guys that market internals are getting worse. Okay, it's 12 days in a row now. So junk bonds ADL is telling us that the credit market is getting weaker. All right. The only thing that's really still holding things up, I think, is first of all, we had options expiration. We had the options market was propping up prices from last week. We had a holiday yesterday, so today or earlier yesterday was the first day after options expiration. Our New York Stock Exchange high-low line is still curving up. I do think that this is going to curl back down, and if it makes that higher low, that could be a buy the dip opportunity. But our junk bonds ADL line will have to agree with that, and when it comes down, it has to make that higher low. Okay, if it makes a lower low, then no, then it's not a buy the dip opportunity. Or if it is a buy the dip opportunity, it's a much more shorter term opportunity. It's not a buy and hold. It's more like a swing trade opportunity. Okay, so that's what I see. Now let's talk about other things. We got other indicators that we talk about, guys. What else do we look at? We also usually look at ZF, which is our what's going on here? ZF. There we go. Okay, so ZF is the I don't know why TradingView is making everything there we go. Okay, there we go. I don't know why it blacked everything out like that. Interesting. Anyway, ZF, that is our 5-year Treasury note futures. Remember, when this is going down very, very quickly and making a downtrend, that is a dash for cash. 5-year Treasury notes, all right? So this is the 5-year Treasury bond prices. Prices and yields are inverse one another. So when this is going down, that means the 5-year yield is going up. And when yield is going up, all right, when yield is going up, that means that there's more of an incentive to hold dollars, okay? We're getting to the point where it's getting dangerous. If it starts breaking down again, we could see a dash for cash again, okay? So we're in kind of a danger zone here. If it just keeps going down, it broke that weekly. It broke that weekly uptrend already. It broke that weekly uptrend. It's already, if it creates a weekly downtrend, definitely we're going to see the dollar go up, and we'll probably see some more downside to the markets. All right. 10-year Treasury notes. Let's look at the 10-year yield. The 10-year yield is going up. All right, the 10-year yield is going up, and so that means valuations get compressed. Last few days, tech stocks have not been doing very well, and look at that. Our growth to value ratio chart is still in a downtrend. All right, we had a monster start to the year as far as tech stocks are concerned, but it's fizzling out already. Okay, it's already starting to fizzle out. We'll see what happens, but my guess is that if the TNX rises, this is probably going to curl back down again as value outperforms growth. It also, if there's a unknown risk in the market, all the stocks will go down. But if this is curling down, it just means tech stocks are going to get hit even harder than value stocks. All right, so this is a very good indicator to look at. And then for the last couple of weeks, I told you guys to take a look. If you're going to look at one chart, it's going to be the Indian Rupee. That's right, the dollar Indian Rupee pair. India is one of the strongest emerging markets, and there's a lot of fund flows in and out of India. If we see dash for dollars from India, from one of the stronger emerging market countries, we're probably going to see a dash for dollars from other emerging market countries as well. So this is something very important to look at. If this breaks out, I think the dollar will break out. And speaking of which, let's take a look at the dollar. Dollar futures. Yes, I want to be looking at this. So this is the dollar. We'll see where it goes. I do think that we have a very good chance. I mean, we could get to here. Okay, we could get to around 107 or so, and that would be great because I still have those UUP calls. Those were my hedges for my quad U shares. And so it's especially if the ZF futures, if the 5-year Treasury bond futures comes down, and we see we see the Indian Rupee also break out. Definitely, we could see the dollar going up there. All right. Speaking of which, I'm curious. We also had an inflation report last week. It was worse than expected. I want to see what's TIP-TLT doing. What's TIP? That's our forward inflation looking indicator. Oh, it's going up. Let's see if it breaks out of this box. Or if it breaks out from this point. If it gets there and it starts breaking out again, that's interesting. That means that the market is looking forward to more inflationary times ahead, which is way faster than what I thought. I thought that this was going to start turning up during planting season. Although we're not too far away, we're maybe 6 weeks or so away from it. That's very interesting. If it breaks this high right here, this high from end of December, and it just keeps going up, that means that pretty much speeds up our time frame on a lot of the market cycles that we talked about from the end of last year, early this year. We might have to speed up some of our expectations on what we thought were going to happen for this year. Okay, could be. The markets have been really fast for the past couple of years. It's just getting faster and faster. Speaking of which, let's see here, TIP-TLT. If that is going up, I wonder what's going on with Fed funds probabilities. So it looks like, I know we were planning on for a quarter point rate hike in March, and then in the summer we were staying. Oh, it looks like now the market's pricing in a 25 basis point rate hike in March. Interesting. Oh, wow, the probabilities have definitely increased from a month ago till now. And then for May, another quarter point rate hike. And then for June, is June yet another? Yes, it is. June is going to be yet another rate hike that's planned. And that was only 3% chance a month ago. Now it's at 58.5%. So that just tells you how quickly things are moving along here. And then it looks like we're stabling off at 525, 550. 525, 550. We had only a 2.5% chance we were going to be here. But now it's more of a 50.5% chance. And then do we just stay there? It looks like at 525, 550, we stay there until... and then... a chance for a rate cut in December. So, okay, so it looks like the market is pricing in now, more rate hikes going into the summer. Now it's at 525, 550. I told you guys back in April, May that William Dudley said that it was going to go up to 5 or even past 5, a little bit past 5. And I told you guys that he was probably being used by the Fed as a messaging vehicle. All right. Dudley said 5, which means Powell was thinking 5 probably during that time. And I told you guys, watch out. We're probably going to go to top nominal 5 or higher. And lo and behold, here we are. Okay. So, all right. So that's that. It shouldn't be very much a surprise to us. We were expecting this. We'll see. The yield inversion trade is still extremely crowded, and it's getting even more crowded. It is getting even more crowded, I think, right? 10 and let's take a look at the 10 and 3 month. Okay, so maybe people are taking some profits on that trade. I don't know. This is just a very, very small move. It's still in a downtrend. I mean, this could just be a little bit of profit taking or whatever, just the normal movements of just markets. But until when that trade unwinds, that will be some volatility in the markets. Okay, so I'm waiting for that trade to unwind, and if it does, I think that's going to present some buying opportunities. There's some of the things that we're looking to buy, of course, guys. SILJ, which is the silver miners. It is now below where I had set my original targets, but with the market condition weakening like this, I do not feel as compelled to be in a hurry to buy. Now, I still want to buy this, but I want to wait for lower levels. I think we might be able to get a little bit lower than this. And I'm going to take my cue from the dollar. If the dollar makes an uptrend, the SILJ could come down way further. So I'm going to be looking out for the dollar. Again, the dollar, Indian Rupee, and all those treasury yields, that's what I'm going to be looking at. And that will tell me when I can get in on SILJ. So right now, it's going to be more data dependent on when I get in. It's not really based on a price anymore. Now it's based on data. All right. So SILJ, I'm still looking to buy, but I'm just holding out just a little bit until we see a signal from the dollar, Indian Rupee, and all those lower maturity treasury yields. Another thing I'm trying to get into, MOS Mosaic. It is curling down. I would like to see some lower levels here. If the market decides to have a little bit of a panic, it could get to like $45, $46 a share. And hey, that would be a great entry into some longer term leaps, which is still the plan. All right. Some of our other stocks that are in our plan are doing actually quite well. FLNG, which is our natural gas tanker, they're actually doing extremely well. Those I go back and forth between, just around break even. It just goes up and down between break even. But it does seem as if it's in an uptrend. It looks like we might be busting out. They are paying a dividend, a little bit higher than expected dividend, so that's good. In this time, I think this will keep going up, especially with our natural gas thesis. I think this is a it's in a very good position to profit at the end of the year. SBLK is doing well. Oh, by the way, SBLK, I rolled the options that I had. Remember, I had the February options that were $21 strike. I rolled them into the April 22s for a small credit. So I am just waiting for that, for Theta to take control, and hopefully we can get out of this for less than the credit that we got paid for it. And that will help us reduce our costs on those leaps that we have. We have those 2025 leaps on those. Okay, still have those. What else? That's all I really had planned. So again, guys, watch out. Watch the currencies. Watch our internal data. I put it all on the Discord for you. It's all free. keep an eye on that. If you're going to look at one chart, actually try to look at two charts. Look at the Indian Rupee and look at the 5-year Treasury futures. Okay, those two will tell you where the dollar goes. Where the dollar goes will tell us where equities will go. Okay, trade safe, guys. I'm going to be back on Thursday. I'm going to try to be back on Thursday at 10 a.m. If the schedule changes, I'll let you know via Discord. So again, follow the Discord. There's no paywalls, no sub fees. It's of the people, by the people, for the people. And if you enjoyed our video, go ahead and hit like, follow, subscribe, comment, show some love, baby. All right. So Thursday, I'm going to see you guys 10 a.m. Hope to see you guys then. Trade safe.